Hello and welcome. This session is brought to you by the tax experts at Pro Tax Accountant. We're going to talk about that dreaded brown envelope from HMRC, specifically the one about untaxed interest. What on earth is it, and what are you supposed to do about it? Let's get it all sorted out nice and simple.
Right, let's kick off with a big one. It's a question that honestly stops people in their tracks. You think your savings are all sorted, but the tax rules? Well, they can be a bit of a maze, especially with interest rates all over the place. You see that phrase, untaxed interest, on official paper, and it's enough to make your heart sink. But honestly, don't panic. By the time we're done here, you'll know exactly what it means, why you might have got that letter, and what your next steps are. No stress. So what is this untaxed interest thing? In plain English, it's just interest you've earned where the tax hasn't been taken off for you by your bank. It's not a fine or a penalty, it's just income that HMRC needs to know about. Simple as that. You're probably thinking, why is this suddenly a big deal for everyone? Well, the answer goes back to a huge change that happened on April 6, 2016. Before then, banks just sorted the tax for you, but then they brought in something called the Personal Savings Allowance, or PSA. And suddenly, the responsibility to declare interest earned over that limit, that landed right on our shoulders. And listen, this isn't just about your regular old savings account. Untaxed interest can pop up from all sorts of places. We're talking fixed-term bonds, peer-to-peer lending, even some current accounts. You've got to think about all the places your money might be earning a little something extra. Right. The absolute key to figuring this all out is your Personal Savings Allowance, the PSA. The best way to think about it is like a tax-free bucket for the interest you earn each year. How big that bucket is, well, that depends on how much you earn. Okay, so for the 2025/26 tax year, if you're a basic rate taxpayer, you get a pretty decent allowance. You can earn up to £1,000 in interest, totally tax-free. But, and this is a really important but, if you're a higher rates taxpayer, that allowance gets chopped in half. It drops right down to £500. That's a huge difference, and it catches a lot of people out. This little table breaks it down perfectly. It's all tied to your income tax band. Basic rate gets you £1,000, high rate gets you £500, and if you're an additional rate taxpayer making over £125,140, your allowance drops to zero. Zilch. Now, here's a brilliant little pro tip for you. If your other income, so not from savings, like your job, is under £17,570, you might be able to get something called this starting rate for savings. This could give you an extra £5,000 of tax-free interest. It's a real game changer for some people. This is the bit that always gets people. You might think, well, if I don't tell them, how are they going to find out? But the system is a lot smarter and more connected than you'd think. See, there's a whole reporting system in place. Your bank, your building society, they all have to report the interest you earn straight to HMRC. HMRC then takes a look at last year's numbers, makes a guess for this year, and might even change your tax code to start collecting what they think you'll owe. And that right there is often why that letter shows up on your doormat. But it's so important to remember this. The number in that letter is just an estimate. It's a guess. If your savings have gone up or down or interest rates have changed, their figure could be way off, and you absolutely have the right to correct it. So if that letter does land, don't just stick it in a drawer and hope it goes away. Here's your super simple 3-step action plan. 1. Review. Dig out your bank statements. 2. Compare. Add up your real numbers and see how they stack up against HMRC's. 3. Contact. If they don't match, get in touch and give them the right info. Okay, let's put this into a real-world context. Let me introduce you to Jameson. He's a freelance graphic designer from Sheffield, and he found himself in this exact pickle. So Jameson gets this letter out of the blue. HMRC is claiming he's got over £5,500 in undeclared interest. He was staring down the barrel of a big tax bill, plus penalties, and just felt totally lost, with no idea where to even start. So what happened next? Well, by getting expert help, they immediately got on the front foot. They put together a voluntary disclosure to show HMRC they wanted to cooperate. That one move was key to getting the penalty negotiated down from 20% to just 10%. Then they sorted a payment plan he could actually manage. And crucially, they helped him set up a simple system so this would never happen again. And that's the main takeaway from all this. You've got a clear path forward. The absolute worst thing you can do is ignore the letter. The power is in taking calm, informed action, whether you go it alone or decide to get some advice. Now, if you're in a situation like Jameson's and you just want that stress gone, the team at ProTax Accountant are the people to talk to. This is exactly what they do. You can get in touch with them directly on WhatsApp, give them a call, or send an email for a confidential chat. And for more easy-to-follow guides on getting your finances straight, ProTax Accountant has a fantastic YouTube channel. Seriously, go check it out and hit subscribe. It'll help you stay on top of your taxes.
So I'll leave you with this question. What's one small thing you can do this week to get some clarity on your own savings interest? Maybe it's just digging out last year's bank statement. Maybe it's a quick search online for your PSA. Whatever it is, taking that first step is everything. Thanks so much for tuning in.